Hello, welcome to this week's Forex Outlook here at xm.com. I'm Rafi Boyajian, currency analyst, and with me is our chief economist, Michalis Florentiadis. So Michalis, we saw quite a big rise in risk aversion towards the end of this week. We had a number of central bank policy meetings, starting with the RBA, the Bank of Canada, and then the more recent one, the European Central Bank, all of which were very dovish. The euro was the worst performer of the week, and we did see significant increases in the US dollar as well as the safe haven yen. So please tell us in more detail what happened during the past week.
That's right, Rafi. The dollar's gains were only beaten by the Japanese yen, and that took place towards the end of the week, where we had some risk aversion setting in. It was interesting that the week started on a positive note, as there was optimism about a trade deal between the US and China. However, as the week progressed, and as you said, we had more or less a chorus of central banks speaking dovishly. This created some pessimism about the global economy, and we also had Chinese exports falling quite sharply during February, although this might have had something to do also with the Chinese New Year, with the timing of the Chinese New Year. Now, the ECB was fairly dovish, and this hit the euro. It was interesting that the negative effect was not only on the euro, but I think on European currencies more generally, because if the euro area is weak, then it bodes ill for Scandinavian countries, for the UK, for Switzerland. So we saw all these currencies falling quite sharply versus the US dollar. So the ECB, quite surprisingly, cut its growth outlook. Well, it was going to cut its growth, just the magnitude of the cut was surprising. It pledged long-term loans to banks, and it also pledged to keep negative rates in place until the end of this year. Previously, it said it would consider a rise in interest rates after the summer, but this is looking like rates are going to stay like this until the end of 2019. The Bank of Canada was also dovish. It abandoned its rate hike plans, and also the Aussie was hit, but not as much as the European currencies that we mentioned. We had somewhat bad data out of Australia. So I think this is more or less this. We are recording this before the non-farm payrolls, but at the moment it seems that the US economy is the relative outperformer compared to other developed economies. So with this in mind, what should we be on the lookout for next week? What are the important data? And I believe it might be an eventful week for sterling and Brexit.
That's why it's going to be quite an important one. Once again, for sterling, we're going to have the second meaningful vote on Theresa May's Brexit deal on Tuesday, on March the 12th. At the moment, things are not looking good in terms of the UK getting those legal assurances it wants regarding the Irish backstop, that it will be temporary. So all the indications at the moment that Theresa May will probably lose the vote once again. If that happens, MPs will then be able to vote on whether or not they want to avoid a no-deal Brexit. So if they do veto a no-deal Brexit, then they will get to vote again, this time on whether or not to extend Article 50. If that happens, we could see sterling making some gains, even though it's not going to end the uncertainty, but at least it will confirm that we're not going to have no deal Brexit, at least not just yet. We did see the sterling falling in sympathy with the euro during the past week. It's going to be the Bank of Japan's turn next week to have its policy meeting. We're not expecting any changes, but Kuroda, in his press conference, he will probably reiterate his readiness to ease policy further if required, given that Japan has also been hurt by the global slowdown. Moving to the US, where retail sales and inflation will be in focus. As you said, the US relative outperformance is helping the dollar. So if we do see more of that in the coming week from next week's data, we're also going to have durable goods as well as industrial output numbers. We could see the dollar holding firm. It's going to be fairly quieter in the Eurozone. We're going to have industrial output numbers. The German ones in particular could attract attention, as if we do see a bit of a rebound, at least some signs of a rebound in January, that could help the euro recoup some of its losses. And finally, we're going to have the Chinese numbers, industrial production, retail sales. We didn't get this in February due to the Chinese New Year, so they will probably attract a bit more attention this time around.
It's also interesting to know that something that happened this week and we didn't mention was that President Trump expressed his dislike for the strong dollar. So it's interesting that the dollar has become stronger since he said that. So I don't know whether we're going to get some more rhetoric. And of course, we're expecting volatility with respect to sterling, because it's not at all clear if Prime Minister May loses control of the process and the control passes more in the hands of Parliament, that there is actually going to be a coherent policy, and whether the EU is going to set some terms for giving an extension, although it's pretty much expected that there should be an extension, and that both sides will want to reach a deal rather than a no-deal Brexit for now. Thank you very much, Rafi, for your input. Thank you everyone for watching, and have a great day.